Apple Computer announced their Q1 earnings after the bell. We'll go through the numbers over at Apple. As you know, this company has been stuck in neutral for a little while. We've done several earnings reports where, revenue growth 3 or 4%. This is a fourth quarter. These things tend to be a little bit better for Apple. You got the holiday shopping center. We'll talk about the revenue over this company. We'll talk about the expectations for going forward. I am seeing that the expectations are actually kind of higher than normal, maybe 4 or 5% growth, even 7% as we get into next year. We'll talk about if Apple's able to do that. Talk about their financials as well. These are like some of the most simple financials. In fact, I teach a class to middle school students, and this is one of the companies that you go to because despite being a really large company with huge amounts of revenue, this is super simple stuff, and you can kind of really dissect these things. We'll also look at it technically as well. I noticed in the after hours, we kind of moved down, and now we're higher. And so we'll talk about that, what that means technically. Also, what we'll do is we'll compare the inventories from last year to this year. That kind of gives you an indication, I think, of where Apple is, maybe sitting on inventory. It also could mean where they believe the future demand is, as this company has great insights to that. What is going on, investors? Hopefully, guys are doing well out there. Apple Computer keeping up with the markets, right? Okay, 26%, I think, was the S&P 500 last year. Apple over the last year up 26% year to date. We've slipped down a little bit lower, but again, after hours, we're up by about 3%. Company announced their Q1 numbers. Revenue came in at $124 billion. That was 4% growth year over year. Beat expectations. Expectations were actually closer to 124. Company came in about, $300 million higher than that. When we look forward to the next quarter, I actually see maybe a slighter, wider spread than what is normal 1 quarter out for Apple. The revenue spread is, the low end is $87 billion, which obviously is a dramatic drop off quarter over quarter. But again, new iPhone gets launched. There's a lot of incentives from the carriers, a lot of, Christmas holiday gifts and those types of things. So you expect a quarter over quarter decline, but somebody's predicting $87 billion in revenue, and the high end estimate is closer to 98. So that gives you consensus at 95. My guess is this number will tighten up into the low 90s, and we'll see if Apple's able to do that. I think a bigger question is, as we move into the back half of this year, can we maintain that? Is there enough stuff over here at Apple? Because when we get into it here in a moment, they've got regions that are struggling, particularly China. I think that's the only region that is struggling, and it's a big region from a revenue perspective. And can it turn around? Has the environment changed over in China where the consumer there demanded the American product? It was viewed as a premium product, and now it feels like they're kicking it to the curb. Now, the company from a revenue perspective, we talked about $124.3 billion service revenue, $23 billion up to $26, just massive gross margin. Let's look at your cost of sales. Okay, so you grew that service revenue by $3.2 billion. Look at your services costs from 6.3 up to just 6.6. So barely budges. So there's like your existential risk to Apple, I think is probably the biggest risk, is that 30% tax that is on almost every transaction in the Apple iPhone store. Like if that gets done away with, I mean, this company would take a massive dip lower, because that is where a ton of this gross profit is coming from. In fact, over $20 billion of the $58 billion in gross margin is coming from that services business. Still humming right along. Company's still spending some money on R&D, but I've noticed the pace has slowed down a little bit. I remember looking at Apple's earnings reports, and they were spending like $1 billion more year over year on R&D. That has flattened out from 7.7 down to 8.3. So whether they might have even come out with those products, maybe it was Apple Intelligence, I don't know. Maybe it was the car project that ended up being ditched. I don't know, but they've slowed that down. Selling general administrative from 6.8 up to 7.1. Total operating expenses came in at this 15.4. So you take your total revenue minus your total cost of sales minus your operating expenses, and you get operating income at $42.8 billion. Last year, it was closer to 40. Key thing with this company, though, is this China revenue. We see that by the segment from 20.8 billion all the way down to 18.5. Can they turn that around? What does the Chinese market want? Do they want like an iPhone? I don't know what iPhone we're on. iPhone 17, 18, whatever it is. that's like literally the same. I don't think they want that. The Chinese consumer wants a foldable thing, or, maybe a larger screen, maybe a smaller, maybe different price points. Apple's not delivering in that market. And I listened to the conference call. Tim Cook put me to sleep, guys. It's not like Elon Musk, who's promising a $10 trillion Optimus robot. Tim Cook will literally put you to sleep on a conference call. Doesn't say anything about innovation, just, talks up Apple Intelligence, talks up Siri is going to be available in a couple of months, and that's it. I don't think he's got any plans over there. I don't think he's super talented. I've called for a lot of executives to be fired, including the Boeing executive, the Nike executive, and the Intel executive. And all three of those executives are sitting at home. And I'm sitting here today thinking we should get Tim Cook out of this business because it's just not exciting. Guys, you and I could run this company. We could put up these types of numbers over at Apple. Where's the growth coming from at this company? It's a disgrace. Okay. Rest of the regions look pretty good. Okay, America ticked up by about over $2 billion. Europe ticked up by over $3 billion. Japan was pretty nice, over $2 billion. And APAC was roughly flat. In terms of device sales, iPhone was actually down year over year. So the flagship product down. It's just showing you they need something fresh there. Doesn't have to be like groundbreaking and revolutionary. Maybe some more price points, maybe even a bigger phone. I don't know. Something different. They literally haven't changed the damn thing. That is why I'm still on, I don't know what version this is, but at least 3 or 4 years have gone by. I haven't even thought about buying a new iPhone. Now, the Macintosh computers, they're still absolutely fantastic, but they last forever. Once you buy one, you're probably good for 3 or 4 years. iPads ticked up a little bit. And your home accessories and wearables, you actually saw a little bit of a slip here from 11.9 down to 11.7. Again, a refresh of the watch, a refresh of the earbuds. There's not much innovation here, okay? They tried to come out that Vision Pro. I had a bunch of people in my comment sections telling me how great that was. I trashed on that from day one. It's not showing up in these revenues. Now, from a balance sheet perspective, company has plenty of cash. There's nothing to worry about. That's why you and I could probably run this company. So they got this cash up here. One thing that a lot of investors miss, and also a lot of the investing sites miss, is they miss this cash right here with Apple. These marketable securities, this is also cash. This is $87.6 billion sitting down here in a non-current asset. My guess, I'm not an accountant, okay? Obviously, accountants actually don't make a lot of money, and I'm trying to make money, so I'm not an accountant. But marketable securities, $87.6 billion. My guess is this is pledged against this long-term debt. So that's why it has to sit here, because it's basically collateral for that. Now, cash and cash equivalents up here, we've got over $53 billion worth of cash just sitting over there. And so the company has plenty of cash. They could do some exciting stuff. Maybe they should be in the market to buy TikTok. I hear TikTok's for sale. I hear it has to be for sale. So there could be some opportunity there for Apple, but I don't see any noise there. Now, in terms of inventory, I think one thing that we could look at with Apple is this inventory number. Now, you can't really compare the September quarter to the December, because it's like basically when the iPhone comes out and then after holiday season. Not comparable. So what you have to do in these situations, and it applies a little bit to Apple, but some of the other companies that you guys look at, particularly like an inventory-based business, although Apple does a very good job controlling their inventory for a company with the sales that they have, they carry very little inventory actually on their balance sheet. Just $6.9 billion. So what I want to do in this situation is you draw the dots with Apple and you say, okay, so the expectations on Wall Street are for 4 or 5% growth, which is actually a little bit stronger than the most current quarter. But so Wall Street's actually expecting some decent growth, and the spread between the low and the high end estimate, the high end estimate is actually calling for maybe higher than kind of low single, mid single digit growth. So the company will have to have some inventory on hand. And so these inventory numbers can go two ways. Number one, it could be that the stuff is not selling to Apple's expectations and they're sitting on inventory. The other way you could look at it is that Apple is thinking that growth is going to, we'll put this in air quotes, accelerate a little bit up into kind of the maybe mid to higher single digits. And so having some inventory on hand might be good. $6.9 billion last year. So what you do is you need to go back to the previous year's first quarter and compare it year over year. They were sitting at $6.5 billion. So they are a little more elevated on the inventory, but it's not enough for a company that is printing like over $100 billion worth of revenue. And even in the next quarter, $90 billion. So I don't think there's enough to read through here. I think the big thing that we have to focus on is this China region. And while we don't have clear insights into it, If we're looking at all these American companies, a lot of them are struggling in that region. Maybe there's just a shift in terms of what the consumer there wants. They want the native or domestic brands, and they're pushing away these American brands to a certain degree. I don't think that turns around. The way you turn that around is through innovation, and I simply am just not seeing that both on the software side, but also the hardware side. Term debt, you got a fair amount over at Apple, but obviously plenty of cash. Now, from a cash flow perspective, it's not that great. So you got 3 months ended. Last year, you did $39 billion, all the way down to $29 billion. So we had some cash flow shaved off. Looks like these non-current liabilities got written down just a little bit. Now, in terms of what this company, they don't have to invest in a whole lot, okay? So they're not building data centers, or at least maybe not big ones. And so they don't have a lot to invest in the money. So what are they doing? They continue to rebuy the stock. So they're not like Microsoft and Meta and Amazon, where they're still buying back the stock a little bit. But those companies are investing a huge amount in data centers and new products, and Microsoft maybe even potentially rumored to buy TikTok and do other acquisitions maybe. No, Apple's just rebuying the stock. In fact, they bought more than they did last year on a quarterly basis, up over $23 billion. Continue to tick down the debt, those types of things. They're paying some dividends. All that stuff is really good. Now, from a technical perspective, you just confirmed a new higher high. This one's been in this uptrend since 2020. Obviously, it's been a long-term uptrend since, a lot of you were like little babies. And so, you're waiting for pullbacks on this one. I tell you what, with the way the S&P 500 is acted, you're not getting opportunities for these real deep pullbacks. If you get them, you get them. If not, I don't see any reason why you wouldn't want to buy Apple stock. I guess there's the upside. They figure out this China situation. They eventually come out with an innovative product that people want. And the downside is they keep humming along. They keep buying back the stock. The service business is huge gross margins. And so I guess your downside is limited, and your upside is they actually do something over at Apple and they actually come out with something innovative. So this one probably is a buy on weakness. It doesn't have a massive valuation, at least from price to earnings standpoint. That's why any dip in Apple, believe it or not, despite all my hating, calling for the CEO to get fired, it's probably a buy. Hopefully you guys enjoyed today's video. Back again with more. Intel will be on the Equity Empire channel. I'm going to toss that one over there. Good luck with your investments.